Good morning, hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lavisha Darad. And we are back with a fresh new week. And after yesterday's good rebound that we made us hope that indeed the Santa rally is on, we'll watch whether today Nifty can extend its gain to the third consecutive day. But it's the weekly expiry day for the Nifty, so volatile moves can be expected given that traders close in their positions at the year end. But for now, the trends in the GIFT Nifty have been indicating a positive start for the Indian markets, and to back it, the global cues remain quite supportive. If you look at the Wall Street, they particularly extended its winning streak for the third consecutive day. We did see Dow Jones that was up a certain cushion, bought stocks which was worth about 3,800 crore rupees in the cash markets, and among the option cues data, Nifty put call ratio jumping to about 1.42 from 1.13 levels in the previous session, and the stock that continues to be a part of the F&O ban that includes your Sammaan Capital as of now. But yes, let's take a quick check of where the pre-open rates stand as of now. If you look at Sensex, it's exhibiting gains of about 100 points. Nifty is also marginally higher above that 26,200 mark as of now in the pre-open trade. But let's understand from our technical expert of the show of how the trade setup looks like. Joining me is Ajit Mishra, Senior Vice President Research at Religare Broking. Ajit, good morning. Now that we have Nifty above 26,150 levels, can it retaste the record highs this week?
Yeah, good morning, Lavisha. And first of all, festive greetings to you, the entire team, all the viewers. So yes, we are finally seeing some sign of relief, rebound, but it's been almost 3 weeks. We are seeing similar kind of trend. Means initially we see that market witnesses recovery from the key levels, but by the end of the week, we at times surrender the gains or build on those gains. So as of now, the consolidation is still on, but the good part is that the key sectors, banking, IT, they are still maintaining the positive tone. For any next leg of the momentum, we need further strength or buoyancy in the banking pack. So we are closely eyeing on that part. But having said that, all the sectors on the rotational basis are contributing to the move. So 25,950, the area where 20 EMA is placed. We are seeing every time we see a dip below this level, markets make an attempt to reclaim that and sustain above the same. So this time around also 25,950 will continue to be the key support area to watch out for. Today being the weekly expiry, 26,200, 300 zone might act as a resistance. So upside after yesterday's move may seem scap, but the tone is likely to remain positive. The focus should be more on buying on dips opportunities. So 26,050, 26,100 is the zone basically where you should look for buying opportunity in the index. At the interim, you should continue with stock specific approach as well.
Some stock specific approach. But Ajit, we did see a good participation that came in from the broad end of the markets, particularly for small caps that gained by about 1%. What can we expect from this space, and do you expect the recovery to continue?
See, the challenge is, Lavisha, that small cap, off late we were seeing noticeable underperformance, and now a bit of a relief definitely is welcome move, but still we are completely not out of woods. Means the small cap index is still trading below the long term averages. So 17,800 for the Nifty small cap index is where the resistance is. So which is roughly around 200 points away from the current area. So that might cap the up move in case, if it fails to hold this level. At the same time, mid-cap index definitely looks comparatively better, means we have almost reached to the record highs again. So focus should be more on larger mid-caps and quality small cap space wherein we are seeing relatively higher strength. So as of now, large cap, larger mid-cap, they are better positioned.
Okay, all right. Let's also talk about railway and defense stocks, because yesterday they did see some buying traction. Anything that you're liking from this space, and how are you positioned there?
So defense, yes, means we were seeing correction in defense basket, but the rebound is equally sharp. Some of the names like BEL, HAL, they are among the top performing names. After this correction, we may see a bit of a consolidation followed by a sustained rebound. So defense, definitely one can continue to look for buying opportunities. Railways, on the other hand, we still feel that the overall downtrend is still intact. So we see a day or two of kind of a recovery or a rebound move, but it eventually fizzles out. So one should wait and see any sign of decisive, reversal pattern formation in the railways counter. Those who are stuck at the higher levels definitely can utilize this recovery to reduce their position.
Okay, all right. Railway is something that you're cautious on. What about the consumer durable stocks? Because yesterday they also cooled off yesterday, and what are you making sense of this space?
So majority of the counters from the consumer durable basket either witnessing correction or consolidation. So still Voltas in this basket looks comparatively better. Means we are still holding above the major averages when it comes to the weekly chart around 13-20 levels. So in case if there will be any sustained rebound in this basket, Voltas might outperform. So as of now, one can continue to hold selective approach within this consumer durable basket, but we have better counters to look at from the private banking, auto, metal, and select counters from the pharma space also. So this is something that you should be focusing on if the view is short term.
Okay, okay, got it. All right, that's the view for consumer durable stocks. But yes, the headline remains today about the Ambuja Cement's approval of merger of ACC and Orient Cement as well to create a single consolidated cement platform. Now, the proposed consolidation is expected to be completed over the next year, and once implemented, all of these three entities will be under a unified corporate structure. Now, Ambuja Cements is planning to issue about 328 equity shares for about every 100 equity shares for ACC, and for Orient, also cement shareholders, Ambuja is expected to issue about 33 equity shares for every 100 equity shares. Just 15 seconds to go before we open. But yes, Ajit, I mean, what's your view? Because brokerages have remained quite positive on the counter. And how are you viewing these steps, and what do the charts indicate?
Yeah, so see, consolidation is something which is going on in the cement basket since long. Now, in fact, we were seeing a pause. So it's a kind of like a structural change. At the same time, as a sector, we believe that the recent price hike has been absorbed by the market, quite well. So overall, cement basket, yes, we have a positive view, and in fact, we have Ultratech and JK Lakshmi in our coverage. Ambuja, still we feel that in the short term point of view, it may continue to find resistance around 560 area. The moment we surpass this level decisively, then we can see some strong directional move on the higher side. So as of now, it looks consolidation might continue with 560 as a hurdle.
Okay, all right. That's the view coming in from the cement stocks. And if you look at the open rates for the cement space, Ambuja Cement's trading with about 3% gains, ACC with about flat but with about 0.3% gain, and Orient Cement's definitely gaining with about 9% gains as of now. So yes, the cement baskets remain quite buoyant on the plans of the merger. But yes, the first rates coming on your screen where we have opened quite flattish in the trade. HCL Software is planning to acquire its Intent, that is your Vobi, which is an early stage with startup in Belgium. But yes, coming to you, Ajit, I mean, from September lows, the stock has added 20%. Today it's seeing a bit of a cool off, but can we see further upside going ahead?
Yeah, so in fact, the IT index, Lavisha, we have seen decent recovery in the last 1.5 months. We are back to the previous swing highs, which Nifty had tested. Nifty IT has tested in the month of July. So a normal consolidation or pullback is likely, but the trend is likely to remain positive. Means the moment let's say we surpass this 39,600 zone in the Nifty IT index, we might see the next leg of the move unfold. SCL Tech within the large cap names, it's consolidating around the previous swing high as well. So means this zone close to around 1700 is what is acting as an immediate resistance. So a decisive close above this would mark the next leg of the up move. So as of now, in case if you have any existing position, you can definitely stay put. 1620 should be your stop loss, and 1780 to 1800, that should be your target zone.
All right, 1780 can be the target zone for HCL Tech as of now. But let's move on and talk about another stock in focus which has been doing quite well. That is your GPT Infra Projects. The company has emerged as the lowest bidder for 670 crore rupees of a road project which has been awarded by NHAI, and that strengthens its order book in the highway segment itself. And right now the stock has been trading with about 6% gains. But yes, Ajit, I mean, today we are seeing good volumes, but the stock has been range bound around that 100 to 106 odd levels. What do you expect? Can the move sustain from today?
So it's a very volatile stock, Lavisha. Means of late, in fact, we started seeing very strong volume action also alongside with the price. So as of now, yes, it looks okay. Means it's been almost in fact 1.5 years of consolidation which has already taken place, and now we are seeing serious attempt with volume. So yes, you can continue to hold your longs 105, 104. That's the support zone, base zone, where we are seeing buying interest emerging on every dip. So that should be a stop loss, and gradually we can see the stock inching towards 135, the previous swing highs.
All right, that's the view for GPT Infra. The stock has been trading with about 6% gains as of now. But let's take a quick check of the live queries that is coming in on our live feed as well. The first query coming in from Naveen is asking the view on UPL, on how the stock particularly is expected to fare. Of course, we have seen that so far this year the stock has moved quite spectacular. But yes, Ajit, coming to you, UPL, how does the stock look like? Because even today we have seen that its subsidiaries has entered into an agreement to acquire hybrid seeds Vietnam.
Lavisha, it's been almost 4 years now that the stock has been consolidating. The last 2 years has been the phase of recovery. Now we have almost reached closer to the record highs. So everything looks okay, means it's a kind of like a buying pivot formation around the record highs that has taken place. 740 is now the new base. So with that as a stop loss, definitely you can continue to stay put. In the next leg, means around the record highs, I'll not be surprised that we inched toward, let's say, 850, 900 levels. So the risk reward is also favorable. With 740 as a stop loss, you can definitely stay put.
Okay, all right. Stay put for UPL. That's the view. Right. Let's take another viewer query. We have Samir Nayak, who's been asking the view on Concord Systems, Concord Control Systems, because he's been holding about 1,200 shares at an average price of about 780 rupees. He's sitting with a profit of over 2x, and yesterday also has won an order of about 139 crore rupees from Indian Railways. Ajit, what's your view for Concord Control? I mean, the stock today has hit in 5% upper circuit.
See, Concord, what we are seeing is a kind of like stability after the phase of correction, but overall, the downside seems capped. That is the good part. And upside, the moment, let's say we surpass these 520 levels, and 550, 560 is also possible. So yes, you can continue to hold your longs with 480 as a stop loss.
Okay, all right. That's the view for Concord Control Systems. And of course, today the stock has been doing quite well with about 5% upper circuit as of now. But yes, let's move on with the next viewer query. That is your Naveen, who's been asking the view on Birla Soft and if there is any fresh entry levels that we need to watch out for. Ajit, I know you have been quite bullish on the IT space, but for Birla Soft, any levels that you need to watch out for?
So Birlasoft was among the underperforming names, Lavisha, means, within the mid-cap IT basket. Now we have started seeing decisive sign of reversal. So that's positive, means the stock has reclaimed all the major averages. It's kind of like a buying pivot also formed while holding above the same. So yes, we can expect further recovery, and this rebound may be close to around 500, 510, something that the stock might test. So yes, from the trading point of view, 420, that should be your stop at present, and with that as a stop loss, 500 is something that you can target as a positional target.
Okay, all right. That's the view for Birla Soft. However, today the stock has been trading with about nearly a percent decline. All right, let's move on with the next viewer query. We have Sandeep, who's been asking the view on GAIL because he's been holding about 500 shares at an average price of about 197, and he's asking whether he can buy on dip or exit the stock at the particular price point. So he's seeing a bit of a loss because his buying price has been at about 197. Ajit, what's your take? I mean, past 1 month also the stock has undergone some correction.
So in fact, if you see, Lavisha, that within the energy basket, majority of the name, excluding the OMC basket, are still either consolidating or trading with a negative bias. So GAIL is also struggling for any sustained up move. The stock is trading below the major averages. So consolidation is more likely because the downside seems capped as well. Because the last time when the stock retraced close to around 160, 65 is something that acted as a very strong buying zone. So after retesting that mark, we are seeing this recovery, but upside around 178, 180 is where we have multiple resistances. So this range is likely to play out in the coming weeks as well, means 165 to 180. For any fresh buying, let the stock surpass 180 decisively, then only you should look for long trades. For existing position, 165 should be a stop loss, and around 180 you should look for exiting those trades.
All right, 180 is the level where he can exit the particular counter. All right, let's move on with our next viewer query. We have Anil, who's been asking the view on JK Tires on how this particular stock looks like. Of course, so far this year the stock has been on a good trajectory itself. But yes, Ajit, any levels that we need to watch out for JK Tires?
So it's a strong consolidation range or pivot breakout. The stock formed a strong buying pivot around the 20 EMA mark, and we have seen a fresh breakout from the same with strong volumes. So everything looks in sync, means with 475 as a stop, one can wait for the newer highs. So last time around 543 was the area basically where we saw the stock testing the record highs. So around that area might act as the immediate resistance, and then towards 580 and 600 levels. So with 475, definitely you can continue to hold your longs.
Okay, all right. 475 is a support level for JK Tires then. Right, let's move on to our next viewer query. We have Contech, who's been asking the view on Fortis Health and how this particular account looks like. Today, the stock has been trading with about 0.8% decline. And even if you look at from a 1 month perspective, the stock has been declining. But in the past 5 days, the stock has received some buying traction. That's why, as a result of which, it is up by about 3% itself. Ajit, what's your view for Fortis?
So Fortis, after this corrective phase from its record high from roughly around 1100 to 850, the long term averages got tested, and now we are seeing the stock is gradually inching higher. 917, that's the immediate resistance, the 100 EMA mark. The moment we cross this, then probably we are set for the further rebound towards 955 to 970 area. So as of now, it's a hold. Fresh buying, one should wait, let the stock surpass this 920 area. And in the interim, 890, that should be a stop loss. Around 975, 980, you should reevaluate your position again.
Okay, all right. That's the view for Fortis Healthcare. Let's move on with the next viewer query. We have Setha Romulu, who's been asking the view on Hindalco and what the fresh entry levels looks like for the counter. Of course, the entire metal basket has been quite buoyant this year itself. But yes, Ajit, what's your view? Because Hindalco has been on an upward trajectory.
That's true. In fact, the metal basket alongside with auto, private banking, they are among the top performing sector. And we feel that Hindalco is a very steady and gradual up move. The stock is currently trading around the record highs. This recent base around 850-55 is the zone basically where one can maintain as a stop loss. Since we are at the record highs, the upside is open, means on every uptick, let's say around 3 to 5%, one should trail the stop loss to 2 to 3%. So as of now, 850 as a stop loss, 910, 920 that you can maintain as a target.
Okay, all right. 920 can be the next target for Hindalco. We need to watch out for that. Let's move on with the next viewer query. Then we have Komal Makhija, who's been asking the view on SBI and whether it's late for a fresh entry in the SBI for a long-term investment horizon. Of course, we've seen quite a bit of the rally in the PSU lender itself. But yes, Ajit, what would you advise? I mean, is it too late for a fresh entry, or can she accumulate at the current levels?
So, she mentioned long term. So, long term, I still feel that, after this almost a year long consolidation, yes, the stock has experienced a strong vertical move, but now from almost like 2-3 weeks, we are seeing consolidation. So, still okay, means she should accumulate the stock in staggered manner. So, around current area, she can add partially, and in case if there will be any dip around 920, she can add more.
Okay, 920 is the price point where she can add more for SBI. Right, on that note, let's move on to our next viewer query. We have RJ James, who's been asking the view on Power Grid because he has been holding the stock from the past 5 years, and he's asking whether it's a good time to accumulate at the current levels. Ajit, what's your take? I mean, because so far this year, the stock has been an underperformer.
Right. So, Lavisha, like what you shared about the energy counters witnessing consolidation, majority of the names excluding the OMCs. So, this Power Grid is no different. Means after this record highs in the month of September last year, we are seeing gradual consolidation. But of late, in fact, in the last couple of months, we are seeing more of time-wise correction instead of price-wise. So, that is a good point. As of now, this zone close to 240-45 is where we have multiple supports. So since he is a long-term investor, he's already spent 5 years with the stock and still trying to accumulate more. He can consider accumulating at current levels and add more in case if we see any dip towards 240.
Okay, all right. 240 is the next dip that can be anticipated. But yes, on that note, we have another energy query, stock-related query by Satya. He's been asking about PFC and whether it's the right time and price to average from a 12 to 18 months time horizon. Any thoughts on this particular counter, Ajit?
Yes, so one can consider adding to PFC now from the long-term time horizon, considering that the last two instances when the stock tested close to around 320-25 area, we saw like a decent rebound. So for any trend reversal, of course, we need a close above 400 mark, but yes, a rebound is possible. And since he's a long-term investor, he can consider adding to his existing positions.
Okay, all right. All right, we have another viewer query by Shweta, who has been asking the view on Tube Investments because her buying price has been at about 2650, and she's asking whether it's good to hold or shift to Sona BLW or Samvardhana Motherson. 2650, and the stock has been trading at about 2579. What would you advise, Ajit? I mean, is it time for her to shift her investment in Sona BLW or the other one that she's mentioned, or good time to hold?
So she can consider booking profits here, and Samvardhana Motherson definitely she can consider. The stock has been maintaining the positive tone, means it's gradually inching higher. The kind of outperformance that we are seeing in the auto basket, that should reflect in the ancillary space also in the coming months. So yes, she can consider doing this.
Okay, all right. She can consider moving her money a little bit. All right, let's move on to our next viewer query. Then we have Alex, who's been asking the view on data patterns for a fresh long-term investment on the current levels. Data patterns today it's trading with about 0.5% gains, but yes, the stock has been consolidating around that 25 to 2600 odd levels itself. Ajit, what's your view for data patterns?
So like what we shared about the defense as a basket, data patterns has also done well, exceptionally well, in fact, in the recent months. And now after retesting closer to its record high zone, we are seeing this time-wise correction. So 2400 is a very strong base for this stock. So as long as we are maintaining above this mark, definitely you can consider adding more. On the higher side, 2800 is the immediate hurdle. The moment we cross, the stock is set for the record highs again. So yes, you can look for fresh accumulation with 2400 as a stop loss.
All right, 2400 as a stop loss for data patterns. All right, let's move on with the next stock in focus, and a viewer query by Shweta Naidu has been asking the view on Dixon because she's bought it at about 1366 odd levels, and if there is any momentum expected, or should she exit and add CG power at the current levels? What would your advice be, Ajit? Because yesterday also the stock did see some brokerage note flashes where there was certain growth uncertainty over the IT hardware import norms. What should she do? Because yesterday it broke below that 13,000 levels itself.
Yes, in fact, Lavisha, all the EMS counters post the news in Cairns are struggling. Means that Dixon has also retraced roughly around 13% in this month so far, and still there is no decisive sign of reversal. So as of now, I won't recommend her to switch. At current levels, let the stock show some sign of further weakness below 12,000 mark, then only should consider exiting. In that case, maybe 10,300 could be the area where the stock might retrace to. So as of now with 12,000, because we are very closer to that mark, 600 points away, one can continue to hold. CG Power is consolidating in a range as of now. So there is no point changing hands at current levels.
Okay, all right. Right, that's the view for both of these counters. Then let's move on with the next viewer query. We have Vijay, who's been asking the view on Vikran Engineering, and he's asking what the next near-term moves look like for this particular counter. Of course, it's a recently listed counter itself, Ajit, but any thoughts on this? Because from the past 1 month, the stock has been under correction mode, 15% downtick.
That's right. And in fact, Lavisha, we are seeing hardly any volumes, on the days of rebound. So it's not a good sign. So this may result in further decline in coming sessions. So if the view is short term, you have bought it for trading. Prudent approach is to avoid such stock and exit if you have any existing position.
All right, that's the view for this particular counter. All right, just one last question before we let you go, Ajit. What are your top picks? Let us know anything that you're finding interesting in this market.
Yeah, so Bharti Airtel definitely, Lavisha, is one of the most consistent name within the telecom basket. Means after this recent price consolidation, the stock has been inching towards the record highs again. So we believe that it's a good area to accumulate fresh, Bharti Airtel with 2090 as a stop loss and 2250 as a positional target. Then from the metal space, wherein we are seeing steady traction, NMDC. we have seen a fresh breakout from the consolidation range. The stock is currently quoting around 80 marks. So with stop at 76, one can accumulate NMDC at current levels with 76 as a stop loss and 86 as a target area.
Okay, all right. NMDC and Bharti Airtel, those are the two stocks we need to watch out for. But with that, we have to let you go, Ajit. But Happy New Year. And of course, thank you so much for your time and joining us.
Thank you.
All right, let's take a quick check of the markets before we move on to our next guest of the show. If you look at the Sensex and Nifty levels as of now, Sensex has been quite volatile and right now it's down by about 160. Both the headline indices pan out and whether there is a late recovery in the markets or not like we are hoping for. But for now, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 o'clock for closing and we'll understand how the market has developed with our experts and we'll also be discussing individual stock movers that have grabbed the headline. Until then, signing off.